This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis, outside the mainstream, featuring discussions and debates between Gordon T. Long, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
Good morning. I'm Gord Long with GordonTLong.com, and I have with me this week John Rubino, well-recognized author and publisher of the website dollarcollapse.com. Good morning, John.
Morning, Gord.
How quickly the month goes by, and actually how dramatically the focus shifts from last month to this month. Last month, people were becoming complacent about Europe, feeling the crisis was generally behind them. You and I were definitely not in that camp. And today we have the world on the edge of their chair with Cyprus.
Yeah, and you know what's interesting is that the crisis points keep getting smaller and smaller. It used to be Greece with 2% of Eurozone GDP was going to tear down the whole system. And now it's Cyprus, which is even smaller than Greece.
And I'll make a speculation. The next thing we're going to be talking about is Slovenia.
Yeah.
Then we're going to be talking about Estonia. And I'm not making it up because, as bad as Cyprus is, Slovenia has got just the same kinds of issues right now. So is Estonia. And by the way, the same amount of Russian money that's at the root of some of the Cyprus problems, hot money, whether it's government money, whether it's criminal money, or whether it's oligarch money, and whether it's being laundered or just deposited, are flowing into those areas and the same kind of issues.
Yeah.
And I can go through some of the other Baltic and Balkan countries that are in the euro or out of the euro, and you start to see kind of the same thing. So there's a lot of information that's being suppressed here.
Yeah, and it's a sign of how fragile the global financial system is, that pretty much anything now can push us over the edge. So we're constantly trying to fix or put out some fire here and fix some mess over there. And
John, I've got up a slide here before we get to some of the slides that you brought, and it's a cartoon. And it really is the essence of some of the issues that I see, and I hope we can talk about, is contract law. I mean, what's going on here? We're taking deposits. We were debating taking pensions, certainly country treasures. We've never seen something like this raised before, and it's a little frightening, and I think, as you would agree, that's really starting to alarm around the world. And our listeners need to appreciate that the size of the Cyprus banks are huge in comparison to the size of the GDP. And that's because there is so much hot money that's come in primarily from Russia that really dominates the banking system. That's not the cause of the problem. The cause of maybe the size of it, the cause of the problem is bad debt, whether it's real estate or whether, in fact, it's Greek loans that were made. And so the whole crumbling Greek economy is taking Cyprus with it. And I mentioned Slovenia here a few minutes ago. A lot of the Balkan countries are also in the same state but aren't getting the visibility. And they're crumbling. I think Cyprus is on the front edge of that. And this chart I have up here is showing this is not a new problem, as these others are. They've been around for a long time, and they've been steadily getting worse with no resolutions. And it's interesting to me that suddenly this is a hot subject today only because of the ELA, the emergency loan, is now kind of coming due. These solutions, we could have been working on this. So I think my point is there's a lot more going on politically and forcing issues than certainly meets the eye, and that's certainly the press is carrying forward right now. Got some slides, some notes that you brought with you that you wanted to make today.
yeah, here's the Cyprus story in a nutshell. They decided to become an offshore banking center, and in a lot of ways, like what Iceland did, they started paying higher rates on deposits than most other banking centers, and they attracted a lot of outside money, including a lot of money from Russia. The Cyprus became kind of the Cayman Islands for Russian oligarchs, a place to park their money outside of the country. And so huge amounts of money flowed in, and the Cyprus banks, to a great extent, invested that money in Greek bonds. So, when Greek bonds turned out to be essentially worthless, the capital of the Cypriot banks plunged and they had to be bailed out. And so they've already been bailed out once or twice.
John, including by Russia. Russia came in here about a year ago for nearly $3 billion alone because they were concerned, obviously, about their money that was in the Cypriot banks.
Yeah, absolutely. And so some Russian oligarchs actually own big chunks of these banks too.
Correct.
So they're on the hook for a lot of the losses that the bank stocks have seen in the last year. And things have gotten so bad that another bailout is now necessary. But the Germans in particular are so sick of bailing out peripheral Eurozone countries that Angela Merkel doesn't believe she can sell a direct bailout to her voters anymore. So they came in and demanded that Cyprus come up with some of the money. And that one way to do that is to force the people who have accounts in these banks to take a haircut. They were going to expropriate 6 to 10% of every bank account in Cyprus. And this raised such outrage because it's really a direct threat or theft, unlike a lot of the indirect stealing that's been going on for the last few years. And so the Cypriot parliament voted this down, and that leaves them at an impasse now. They don't have any source of money for the bailout that Germany is demanding that they come up with. And the banks are closed. ATMs are open to an extent. People are lined up around the corner of every ATM machine trying to get what money they can out of the banks. And next week, the banks will either reopen, in which case everybody's going to line up to pull their money out, and you'll have massive bank runs, which basically shut down the banking sector. Or the banks are going to have to stay closed, or the banks will reopen with strict capital controls that, even though the bank is open, forbid you from taking your money out of the bank. So however it works out, it is a catastrophe for Cyprus. And much more importantly, it's a signal to the rest of peripheral Europe that you're next, you know? So if you're an Italian with a big balance in an Italian bank, and when your bank's open next week and you see what's happening in Cyprus, it's going to be very logical and prudent for you to take your money out of your Italian bank. So we could easily see bank runs across the European periphery in response to little tiny Cyprus, you know? And so the crisis that we've all been waiting for in the Eurozone, could come soon because of this little tiny country that otherwise shouldn't be very important, except someplace with pretty beaches.
You know, we're on, as of this morning, John, Plan D. Plan A was to basically steal the cash from the depositors. That is the 6 to 9% tax they were calling it, which is out and out theft because a lot of it's below 100,000 euros, which means it's guaranteed and insured, but they're going to take it anyway. That wasn't flying, and as you correctly point out, the EU, Brussels, was terrified this was going to create a wave right across Europe, and I think it's already cat's out of the bag on that one. But Plan B was they were going to steal the cash from the pension plans, which is another contract law kind of issue, sell assets and facilities, including ports and gas rights to Russia. Of course, Russia sent them packing here the other day. So then they went to Plan C, and that was a solidarity fund, they call it, which is basically the old collateralized debt obligations, except it was going to be called collateralized Cypriot obligations. I just busted up when I saw it. Now we're on Plan D, and we're back to taking it from the oligarchs, and a double dipping no less, because they're going to charge them upwards of 12% on anything over 500,000 euros, and then they're going to put it into a bad bank, and they'll probably get a 40% haircut there. So they're really sticking it to the Russians right now.
Yeah, there are no solutions to something like this that get you out of it painlessly. It's a question of which kind of crisis you want to precipitate, and taking it from the Russian oligarchs is a really interesting choice because traditionally, the Russian power structure doesn't respond well to people messing with their money. So you got to wonder if the Cypriot parliament starts having car accidents and dying of strange, unexplained illnesses here pretty soon, because that tends to be the way the Russians respond to stuff like this.
Remember, John, there's 3 types of money that's there. There's the oligarchs, but there's also a second is the criminal money. And then surprisingly, there's Russian government money there too. So they're all responding differently. But the Russians are furious. The EU didn't consult them earlier on what alternatives might be. They're trying to pass the bill.
This is by no means over. Even if they announce a plan, quote unquote, this is going to drag on for a while because whatever they choose has ramifications that will be felt in other parts of the world, and which might be like dominoes falling, where something in Italy causes something to happen in Spain, causes something to happen in Greece, and so on through Germany and France. And So this goes on for a while, and it won't be fixed anytime soon. And the problems that it causes are probably going to be fairly serious. But that's just the immediate effect. I think the bigger question is, what does something like the confiscation of bank accounts do to our conception of property rights within the democratic capitalist systems that have been so successful for the last few hundred years? There's a Harvard historian called Neil Ferguson who wrote a book called Civilization, the West and the Rest, where he gives a list of the institutional arrangements that, in his opinion, allowed a bunch of fairly backward Europeans to take over the world in the space of a few centuries. And one of the key institutions was property rights. In other words, if you own something, it's yours. It doesn't belong to the king or the local lord or the clergy. And if you have a contract, that contract is sacred and it's upheld by the powers that be rather than violated by them. And that allows people to create and to work hard and to save, secure in the knowledge that they're going to get to keep it. They'll get to keep most of what they make, and they'll get to keep all of what they save. And that has really powered innovation for the last several hundred years in democratic capitalist societies. Now, we're on the verge of destroying that concept with an idea like a government coming in and just taking your bank account away. And with the other proposals that are out there, where they're going to nationalize pension funds or steal assets in other ways, in other forums, is just going to exacerbate this perception that's growing now that we're not safe. Our assets aren't safe from the governments who are becoming predators instead of our protectors. And, if that idea takes hold, everything changes. Nobody's going to want to invest. Nobody's going to want to hold a financial account, or certainly not a bank account. And we're going to go back to, cash under the mattress kind of society, which is way less efficient, way less creative, and a lot harder to manage from the point of view of elections leading to stable governments, leading to economic expansions. That kind of thing is not going to happen if we don't trust financial accounts. And so that's what's at stake now. It's more than just, will Italians pull their money out of their bank accounts next week? It's about our faith in the entire economic system, from Europe to Asia to the U.S. And so this is very big, and it's something we should all be paying attention to.
Exactly. A few points I'd make in that regard. There's a distinction in the law of the United States and Great Britain between private property and investments. And your own money and your own house are treated differently than the ownership of securities. And both countries also have due process of law, where courts decide who is entitled to what under bankruptcy laws. And the government does not and cannot mandate the seizure of private property without this due process. Germans now, they're arguing that the bank in Cyprus are bankrupt, and it's on that basis that they believe that the depositor's money is now eligible. And it's a very complicated set of sequences that has to go through here, but we're just bypassing them. And a lot of the money that's deposited, we've been talking about being Russian money, but it's not. There's American corporations' monies in there. There's German monies in there. There's other private individuals who are also being impacted here and who are going to sue. The banks and the bonds in Cyprus are under British law. That in itself complicates things, not under EU mandate. So that's also going on behind the scenes. And I was reading an article, David Kotok, chairman and chief investment officer over at Cumberland Advisors, and he's in Europe, and he wrote a missive to his investors saying that unless things dramatically change, he advises them get money out of Europe. That this is a systemic issue, that you cannot trust. He believes at this point the euro deposit system in the euro bank system and within the euro system countries. That are pretty strong and bold kinds of statements, but he is that troubled by what he's seeing and what he's hearing, and I use that as an example of people managing a lot of money that are looking at this that closely. No matter what, it's going to force them to take risk off the table.
Yeah, absolutely. 2 points there, Gordon. One is that, when you deposit money in a bank, in a sense, you're tying your fortunes to that of the bank, but where there's deposit insurance, and there is deposit insurance in Cyprus, as in most of the rest of the developed world, you believe that at least for the first 100,000 euros or whatever that you put in the bank, that's your money. It's insured, and therefore you get it no matter what. And if that turns out not to be true, then it calls into question the whole concept of a bank account, and certainly of a brokerage account or something like that. If that's not really your money, if it depends on whether that financial institution succeeds or not, and you have no way of knowing whether they're making good decisions or not, or whether they're buying Greek debt or whether they're investing in something that is going to survive, you can't know that. And so therefore, you stop thinking of a bank account as risk-free, a no-brainer decision, someplace where you just park your cash while you're waiting for something else to happen. And it becomes a risky asset. And that completely changes the perception of the banking industry from the point of view of the average person, and in a bad way.
The other thing it changes too is insurance, because your pension plan, you believe if somebody's holding it, it's your money. And here the government is going to take the pensions and issue government bonds in lieu of. And that's what we've seen in South American countries, and we've heard it debated here in the United States. I think we'll see these kind of issues within 2 years. As the financial crisis worsens, the governments are going to decide, forget bank accounts, they're going to decide pensions are monies that they'll grab, and they'll issue you a piece of paper saying I owe you, called a bond, the same as we're doing with the Social Security system. There's no money there. It's just an IOUs in the box. That grab is coming.
Yeah, right now in the U.S., there are several $1 trillion of IRAs and 401k funds just sitting there and not paying any taxes. So that's got to drive the government crazy here. They really want to get at that money. And as the old saying goes, never waste a good crisis. It's completely possible that in the next financial crisis, which is definitely coming based on our numbers, that one of the responses that we'll see from the government is some kind of a nationalization of private tax-deferred savings accounts. Maybe they'll come in and they'll want to tax away 20% of each account, or they'll do a forced conversion of where you got, let's say, gold mining stocks in your IRA. The government takes those gold mining stocks and gives you treasury bonds in return. And see, that sounds outrageous to American ears, but it's not all that different from what's happening in other parts of the world right now. And it happened in Latin America not too long ago. That's easy to dismiss, but now it's happening in Europe, which is like us, and so if it can happen there, it can definitely happen here. And that's going to change everybody's perception of how all this works. And the big beneficiary of this, obviously, is hard assets. All of a sudden, some gold coins buried in the backyard looks a lot better than a bank account or your IRA or your pension plan, because at least you can get to this stuff. The government can't just pass a law that cuts 30% out of your accounts. Your gold coins are yours. And so I think for this idea to spread, means that more and more money will flow into precious metals, and not just any precious metals, but physical precious metals held in hand. And so I think from a precious metals investor standpoint, this is great news, because we're finally seeing the true face of the guys that are in charge of Europe and the U.S. And that is, they don't believe in property rights. If property rights conflict with their efforts to maintain control. And as it gets harder and harder to control these deeply indebted countries, property rights are going to more and more fall by the wayside. Every time there's a crisis, the casualty will be private assets. And that's coming.
We will solve, I believe, the Cypriot problem. I say solve, the banks will open and we will move on, but we move the pendulum and the mentality as whether a trial balloon further along, that the people are going to start to believe that the governments have the right to confiscate assets. That's the subtle part. I mean, they don't, and it's blatant, but they'll start to see that as a real possibility. 6 months ago, 2 years, we've had these bank stress tests, and all the Cypriot banks came out fine. So that just tells you the magnitude and garbage that's been going on with these stress tests. And I mean, I could go on. The denial and the papering it over and frankly getting to be blatant lies. And I was reading Der Spiegel fairly extensively here over the last week as I was following a number of stories, and this one included, trying to understand the Germans' view of the things. I think I understand everybody else's. And there is an anti-EU sentiment that's growing now. It's been there for a long, it's growing at significant rates. And Merkel's actually kind of riding a bit of a wave right now, playing hardball in here. I think that in the next year to 2 years, you may see Germany leave the EU. And you may see them throw in the towel and leave and take and go back to the mark and gold back the mark. Remember, they're the second biggest gold holdings in the world with 3,600 tons. And suddenly they would have complete stability, a legitimate currency, and not only that, with the Target 2 accounts, which they've been securing more and more of assets, not in euros, they would literally own these other countries who would be debtors to them, the ultimate of mercantilism. And whether they're thinking that now, or I think they're going to be politically forced against the wall because they just can't accept these countries, and we didn't get a chance to talk about Italy in the recent election, and France throwing in the towel on austerity completely, who was the other core. They're all alone now. They're having to bankroll everybody, and the Germans just aren't going to go along with it. Sorry to be long-winded, but these are the significance of what's going on in Cyprus right now.
Yeah, you are absolutely right. I think the people in charge of Germany right now don't envision themselves leaving the Eurozone.
Oh, no, not now. I don't believe that.
It's a sign of how limited their freedom of action is, that they weren't able just to bail Cyprus out of petty cash. I mean, we're talking 10 billion euros here. That is a rounding error in terms of the amounts of money that these guys have been tossing around. And that they can't even sell that to their electorate means that their freedom of action is incredibly limited right now. And like you said, it's because of the rise of anti-Eurozone sentiment. And there's a political party now in Germany that's gaining some traction, with that being its platform. Pull out of the Eurozone, go back to the Deutschmark, maybe back the Deutschmark with gold.
I listened to speeches by Pepe Grillo, who came out of nowhere in Italy. They were really very, very powerful speeches. And what he did and the sway he got, but it was attacking the euro. It was attacking the system. He even referred to Mario Monti as nothing more than the banker's choice to put in charge of the bankruptcy and receivership of Italy, and that's effectively what he was doing. Mario Monti, when he got 10% of the votes. So when they elect a comedian, literally a comedian, because the Italian people disrespect the euro and rejecting austerity, you put the Germans in an impossible position. And I agree that they're not there now. I think Merkel's replacement, the next party that will take power from her, is going to ride a platform, or it's there potentially, to ride a platform to say, we're out of here, man.
Yeah, well, Merkel's pretty adaptable. She might survive by adopting those positions one of these days down the road. But yeah, clearly the momentum is towards independence and away from the Eurozone in a lot of European countries, and now Germany. And that's really the key. Let an anti-Eurozone party get 30% of the vote, as happened in Italy, and everything changes, because Germany's no longer able just to write bailout checks to everybody in sight, and the peripheral countries are going to have to survive on their own. And we're seeing what that means in Cyprus right now. And soon we'll see what it means in Italy. These guys can't do it on their own. They cannot live within their means because of their bad decisions of the past 30 years. And that's why Italy, by the way, is such a mess, and why Pepe Grillo won't be able to fix anything. He's very good at criticizing the powers that be, but when you look at the proposals that are bubbling up from his party, they're more a mishmash of higher spending and lower taxes than anything else, which won't solve any of Italy's problems. Monti actually tried to impose a little spending discipline on Italy, and he only got 10% of the vote. And that tells you something. That tells you that the populace isn't ready for adult economic policies, and that overspending and overborrowing will continue until the system collapses, or until they leave the Eurozone and go back to the lira and devalue the lira by 50%, and which, you know, is also a expropriation of bank account holders' cash. You know, if your bank account used to be in euros, but today it's in lira at 50% haircut, you've lost half your money. And so that's coming too. So one way or another, savers are on the hook for all of these bad decisions. You know, it might be in Cyprus, it might be in Italy, it might someday be in Germany. You know, it's not a good time to have cash in a bank, no matter where you are.
What a great subject, and we could talk about this for quite a bit more time, but we're up against our hard line as usual. Final comments you want to make on this subject?
Well, only that this is really a fluid situation right now. So a lot of what we said, Gord, will be completely obsolete in 2 weeks, because things are going to happen that are unexpected. Just as in the last couple of weeks, who would have predicted that we'd be talking about Cyprus now in these terms? Well, 2 weeks from now, we're going to be talking about other things that we didn't expect to be talking about today. And so this is a fascinating time to be paying attention to this stuff, and also a really scary time. It seems to get worse and worse from the point of view of people who are trying to just protect their capital. You know, this is one of the hardest times ever to just hold on. You know, if you're a retiree trying to live off a fixed income, or you're a young family trying to build up a little capital, this is an almost impossible time, and it's getting harder and harder.
A few years ago, people would laugh when you would say to them, look, it's about return of capital, not return on capital. Now that everybody tells you the same thing. I mean, that's how much a shift is the fear. Forget, I mean, because you can't make anything in the banks, et cetera, then just trying to protect your capital. So here we got the basement in Europe. You know, the only way out is going to be plummeting euro to be able to help these peripherals. And, you know, don't think for a moment Germany's in such good shape they can continue bailing out. I don't know if you've been looking at the numbers. That's called recession sitting in Germany right now, and the slowdown that's going on because they were exporting to a lot of these peripheral countries. So they're starting to literally seize up right now.
If I could interrupt there, that's a crucial point about Germany, because they basically did vendor financing for a decade there, where they lent money to the peripheral countries in order for the peripheral countries to use that money to buy German stuff. So Germany put up these phenomenal numbers. They had a trade surplus and a nice tiny budget deficit. And a lot of that was because they lent money to these countries who were never going to be able to pay them back. And so at some point they have to write off that debt and in effect restate all their GDP and deficit numbers for the last 5 or 10 years. And those numbers are going to look a lot worse than when they restate them. So Germany is not the powerhouse that we think it is.
Precisely, John. Absolutely. Yeah. I'd make one comment on that. All this vendor financing, what they're trying to do now is they're trying to move the collateral into something that's more secure. Rather than being IOUs, now they're saying, I want it payable in gold. I want it payable in sovereign assets. They're trying to make sure that it's payable in real substances. And to me, that's begging the question. Once that's the case, and it's not in euros, denominated in something else, German banks are truly trying to move these things out of euros and into hard assets. You can see that happening.
That might be part of a strategy. You know, you strip the debtor countries of all their worthwhile assets, and then you cut them loose.
Isn't that exactly what happened in Cyprus? Isn't that what's going on in these countries? I'm not saying the German government's trying to do that, but I believe Frankfurt German banks, as a banker, that's what you should do. And so I think these steps, as unplanned as they may be, start to lead to some logical roadmaps. And that's what I'm kind of personally speculating on here this morning. We have to break now. Could you tell our listeners how they could learn more about your writings and your site?
Yeah, I run dollarcollapse.com, which covers the stuff we talked about today, among other things, on a continuously updated basis.
We're going to be back later on this week, and plan is to talk about Japan, but I don't know what's going to happen between now and then, John. So talk to you later this week.
Great. Thanks, Gord.
Bye.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.